We're analyzing ON Semiconductor, stock ticker ON, to see if it's a great business on sale. This analysis is going to be intense, but it's going to be worth it. We're using the Select 6 analysis to look at the most telling financial metrics before estimating a fair value for ON Semiconductor. Then we're giving a final rating to the business. Before we get into these valuable metrics, let's understand ON stock performance. Right now, ON Semiconductor trades for $102.14 per share. Year to date, their stock price is up 61%. They're beating the market. In the last 5 years, ON Semiconductor is compounding at 35% annually. They're one of the top performers over this time. In the last 10 years, they're compounding at 30% annually. Going back before the global financial crisis, ON Semiconductor has compounded at 18.5% annually for almost the last 20 years. This is beating market averages over this time. ON Semiconductor trades $5 below its 52-week high. The company's up nearly double from its 52-week lows. 6% of their shares are sold short, so there is some short interest in the business. ON Semiconductor is a big company. They have about a $43 billion market cap. The burning question is, why should we be paying close attention to ON Semiconductor? For some news on the business, ON Semi just secured $2 billion worth of supply agreements with leading solar inverter manufacturers. ON Semi is a supplier of power semiconductors and sensors focused on the automotive and industrial markets. ON Semiconductor is the second largest power chip maker in the world and the largest supplier of image sensors to the automotive market. While the firm used to be highly vertically integrated, it now pursues a hybrid manufacturing strategy for flexible capacity. ON Semi is pivoting to focus on emerging applications like electric vehicles, autonomous vehicles, industrial automation, and renewable energy. Now with that understanding, let's get into the numbers. Starting with metric number 1, we want ON Semiconductor's average return on capital in the last 5 years to be above 14%. The average business earns about 7% returns on capital. Looking for a benchmark that's double this can build in margin of safety based on the quality of the business. Semiconductors can be a cyclical industry. ON has been no exception. They had low returns in 2020 due in part to supply chain issues amid the chip shortage. Since then, as things have opened back up, their returns on capital have skyrocketed. They earned 28.5% returns in their last fiscal year. When these are averaged out, ON earns about 15% returns on capital in a given year. That's slightly above our benchmark. While it's been cyclical, it's double the average business. This is a check on metric number 1 for ON Semiconductor. Metric number 2, we're looking for growth. We want to see 5-year revenue, net income, and free cash flow growth. We'll include their last 12 months worth of numbers in our calculations. All 3 of these need to be up for this to be a check. In this time, ON Semi's revenues have grown by 42%. Their earnings have tripled. They're at their highs over this time in their most recent fiscal year, and their free cash flows have grown by 82%. This is growth across the board for ON Semi. Another check on metric number 2 to go along with high returns on capital. Metric number 3, we're looking for earnings per share growth. We're taking a look at ON from the view of an individual shareholder. In this time, despite cyclicality in the business, their earnings have tripled and ON has only diluted shareholders by about 3%. This means they've grown their earnings per share. Another check on metric number 3 means we're perfect so far. How will ON perform in the second half of our analysis? Metric number 4, we're looking for free cash flow per share growth in the last 5 years. A similar story here. Their free cash flows are up by 82%. This outpaces their 3% shareholder dilution. This is a check on metric number 4. So far, we're perfect through 4 metrics. Can they keep this going? But there's still one vital piece missing. You might think nailing returns on capital and having good growth is the key, but we haven't touched on the one thing that I believe sets ON Semiconductor apart, which is having these without using a lot of debt. Metric number 5, we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the sum of their free cash flows in their last 5 fiscal years. ON Semiconductor has reduced their net debt position over this time. They ended last year with just under $600 million of net debt. Right now, they have about $1 billion worth. In their last 5 years, they've generated $4.1 billion worth of free cash flow that comfortably supports their net debt position. This is a check on metric number 5. ON Semiconductor generates a lot of cash compared to the debt they're using in their business. We're flawless through 5 metrics. Does ON Semiconductor have what it takes to be a perfect Select 6 stock? Let's find out. The big metric of them all, metric number 6, We want ON Semiconductor's average 5-year free cash flow divided by their enterprise value to give us a yield that's above 5%. If this is the case, this gives a slight risk premium to the yield of the 10-year treasury. It's the first of 2 different ways we're estimating a fair value for ON Semiconductor. Right now, ON Semi has a $44 billion enterprise value. This accounts for both their market cap and their net debt position. It looks at ON Semi similar to it being a private company. In the last 5 years, we learned they generated $4.1 billion worth of free cash flow, meaning in an average year, they generate around $820 million of free cash flow. When that's divided by their enterprise value, it gives us a 1.9% average free cash flow to enterprise value yield. On a current basis, ON Semi produced $1.4 billion of free cash flow in their last 12 months. When that's divided by their $44 billion enterprise value, we get a 3.2% current free cash flow to enterprise value yield. Both of these are down from that risk premium we're looking for. They're also below the yield of the 10-year treasury, meaning coming in all the way on metric number 6. This is ON Semiconductor's first and only X of the day. Don't just throw this business out. We still need to estimate their fair value per share and give our final rating. Everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze ON Semiconductor, which takes us on to using a discounted cash flow model to estimate their fair value per share. A DCF model is based on the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. We're starting with an average of ON Semiconductor's 3-year free cash flows, then using historical growth assumptions to project these into the future. It's up to you to figure out if these will be accurate or not for the business. ON Semiconductor has been a somewhat predictable business in its past. That can impact our assumptions. Assuming they grow these 3-year free cash flows at a rate of just under 8% annually for the next 10 years, then in the following decade, assuming that this growth rate is cut in half and these grow at 3.8% annually, we're adding in their tangible book value to give an estimate of their net worth. If we want a 15% rate of return, which is what Warren Buffett looks for from his investments, if today's valuation multiples are the same 20 years into the future, an estimate of ON Semiconductor's fair value per share is only around $35. That's down almost $70 from their current stock price. Keep some key points in mind. ON Semiconductor has been a predictable business in its past. That's not a guarantee for the future. Also, the company's average free cash flows are including both a pretty down year for the business in 2020 and a pretty good year, 2022. You need to understand the role of cyclicality in this business. As semiconductors can be cyclical in nature, they're historically prone to boom and bust cycles. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. In just a minute, we'll give our final rating to ON Semi, but we need to address something first. We've covered the numbers, but the qualitative factors may be even more important for this business. What are they? Well, let's find out. Looking at the qualitative factors supporting a long thesis, number 1, ON Semi is focusing its portfolio on the automotive and industrial markets, which can expand margins and create stickier customer relationships. Number 2, ON Semi can continue to outgrow its underlying markets and the broader semiconductor industry by selling greater dollar content into applications like cars and renewable energy applications, which can also help stave off its vulnerability to market cycles. Number 3, ON Semi's image sensors are best of breed in the automotive market with a leading market share in high-growth mission-critical applications like ADAS. It wouldn't be fair if we didn't cover the negatives as well, looking at the factors supporting a short thesis. Number 1, management faces considerable execution risk in maintaining its lofty margin targets, especially as its footprint consolidation has lagged over other competitors. Number 2, ON Semi's silicon carbide portfolio should be one of its primary business drivers over the next 10 years. There is high competition from well-capitalized peers as a major risk in this market. Number 3, despite its business transition, ON Semi is still prone to cyclicality that can negatively impact its sales and margin profile. There you have it for a balanced perspective of some of the qualitative factors of ON Semi's business. Now it's time to give our rating. In analyzing ON Semiconductor, stock ticker ON, we learned this cyclical business seems to be going through a boom period. It performed very well on our analysis. It's just around boom times that cyclical businesses can look cheap on a quantitative basis. That's why we have such an emphasis on the qualitative as well. ON Semi's grown, they have above average returns on capital, and they also have a modest debt position. That's supported by their free cash flows. It's worth reiterating this analysis is not financial advice. ON Semiconductor's free cash flow to to enterprise value yields don't look attractive compared to the yield of the 10-year treasury. When we performed our discounted cash flow analysis, if today's valuation multiples are the same 20 years into the future, based on those assumptions, if you want a 15% rate of return, an estimate of ON Semiconductor's fair value per share is around $35.50. ON Semiconductor last traded at those levels to start 2021. Looking at all the factors of our analysis, ON Semiconductor looks like a modest candidate for further research. If you enjoyed today's video, be sure to like it, subscribe to the channel for more stock analysis videos, share your thoughts about ON Semiconductor, and let me know what business to look at next in the comments below. Thanks for learning about ON Semiconductor with me, and have a great day.